You're watching Earnings Edge, and my guest today is country's largest insurance company, and Mr. R. Doraiswamy, who is the MD and CEO of the company. So, thank you very much for joining us on NDTV Profit. First of all, congratulations, and it's going to be a long 3-year tenure for you. Let me begin by asking you, sir. You have a 3-year tenure now. How do you see the transformation for LIC in these 3 years?
Good morning to you, and thank you very much for having me on your show. It's a very responsible challenge that I have. The corporation has been built over a period of time, and we are entering the 70th year. We are in the midst of a digital transformation that has been started 2 years back. Corporation has been built on the trust of crores of policyholders, and it is the challenge in front of us that we build on that, keep the organization high in the minds of everybody. The digital transformation that we are currently looking at is something which needs to be taken forward and taken to its logical end, by which we will be a completely digital savvy organization where from customer onboarding to claim settlement to all the servicing requirements will be completely digital one. We'll have to meet the aspirations of the ever-growing population of India, and particularly the length and breadth of the country. The biggest challenge before us will be to be a major partner with the regulator as well as the industry in making insurance for all by 2047 a reality.
Mm-hmm. Sir, you've personally looked at Project Dive, and that's what is coming to a conclusion, you said. Once that is done, will it be at par with the international insurance companies? Will LIC be at par with them in terms of how you deal with onboarding to claim settlement, everything?
In terms of the service capability, yes, we should be equal to or better than anybody in the industry. But it's a continuous process. See, we are a legacy institution. We cater not just to the urban population. We also cater to the rural and not so well-to-do population as well. Our mandate when LIC was formed is to see that the insurance is spread to the nook and corner of the country. Having said that, we have policyholders who are not digitally enabled as well, who still use a feature phone, who still do not use data. So we have to be in the hybrid mode. We'll have to serve the customers who are completely tech savvy to those who are not that tech enabled. So we'll be having both, and only thing is we would like to be doing well in such a way that nobody feels handicapped. Every customer will feel comfortable engaging with us, be it the young millennial population or the young population who would like to do everything on mobile, or the one who would like to walk into a branch and get the service done. Both will be taking in our stride and taking it forward.
Sir, let me complete the quarterly numbers. It was a surprise for the street, and I think it's reflecting in the stock price as well today. APE growth was the story which has, which has been lagged by the market. How do you see this growth in FY26?
No, we would like to continue to grow. See, this directional change was brought in 2022 itself when we went public. Earlier, we were a very strong conventional par player. When we got listed, we had to make a directional change in that non-par focus had to be brought in. We did it by introducing products which are very attractive, which met the needs of the customers, and also brings along with it a good margin for all the stakeholders. Also, what has happened is the October 2024 change brought in the regulations,
yes,
where the master circular was implemented, and there had to be a forced change to all the products that we were marketing earlier. Some products we had to modify because of the surrender value requirement, and some products because of the underlying assumptions. So it was almost like every product had to be promoted or replaced. That having said that, we also had to change the minimum sum assured of some popular products. And we had to increase the minimum sum assured from 1 lakh to 2 lakh just to be compliant with the regulation as well as the product being viable. So that has resulted into our increasing the per policy ticket size. Though we are not able to show a growth as on today in the number of policies sold in comparison with what we did last year, the ticket size had gone up, and with that the APE has gone up. So we could show a good APE increase, and with that the VNB margin has also been better than what it was last year. So our focus will be to show growth even in number of policies, show growth in the APE, absolute volume of premium, as well as the margin, which keeps increasing. We don't have a particular number in mind, but it will be better. Continuous growth is our motto.
So value growth was something which was because of the rise in premium which happened. Volume is something that you're aspiring to, so that you can go back to the pre-October 2024 numbers.
Yes.
So do you see your timeline for that kind of volume coming back?
See, the negative growth percentages that we were seeing immediately after the introduction of the new circular was very heavy. So we have been reducing that degrowth numbers. We have come to, for instance, for the current quarter, it's at a negative growth of around 14%.
Yes.
But when we move forward, when the numbers for July comes, and when you see this will come down, and we would like to see that we show a positive growth in the current quarter itself, if possible. That's the entire energy is being focused on that, to increase the number of sales, so that we with that, the ticket size having been increased already, the volume growth in premium will be substantial.
One thing which is, I think, also enthusing the market is that you've guided for the second half of the year to be much more in terms of growth compared to the first half, and that's what is also bringing that optimism. Do you think the volume growth would normalize by the second half, and then it will push up because the value growth is already there for you?
Yes, sir. Actually, in the second half, naturally, growth has to be better because of the low base last year. We had gone into degrowth from October last year, so we expect that the trend that we maintain and the increased focus that we are giving on number of sales will certainly look at enhancing the growth in number of sales in the second half. That is something which we expect to happen. We are also bringing in a lot of new products, which are also we are trying to bring in to see that every aspiration of the customer is met. So some innovation in products also is something which will be helping us in showing the improvement in numbers.
VNB growth is also very encouraging this quarter, and do you see the kind of momentum that you've now gone in the first quarter with the VNB growth? You can sustain it for the full year?
We should be able to sustain and grow upon it. See, if you see the VNB trajectory every year, it will be starting at a lower number in the quarter one, and it will keep increasing second, third, and fourth quarter.
Yes.
That is what we have been seeing.
True.
The same thing we are looking forward to having it in the current year as well.
Yeah. So if I look at the VNB margin, and you mentioned about it, how you begin your trajectory, in Q1 of FY25, you had the margin of 13.9. You ended with 18.4%. Now you're starting at a 15.4%. Are we to say that, if you look at the trajectory, you will hit about 20% by the end of exit of Q4?
I don't want to guess a number or have a...
But is that the trajectory possible?
Yeah, we are certainly looking at improving quarter on quarter. Whatever has been, what we have already achieved is something which will be a benchmark for us to exceed. So we are certainly looking at a VNB margin for the year, which will be slightly more than what it was in the last year for the full year.
Give me a sense of the non-par strategy, because you have been able to grow to over 30% of your product mix is not non-par. Where do you see non-par now going in? Because if I look at the premium that you collected in Q1, 50-55% was coming from non-par for you. So is that the number ultimately for non-par for you?
Sir, actually, if you look at the buckets, the annuity is in non-par. Annuity naturally are very high ticket size products. We have non-par savings also, which has been doing well. And if you have noticed, first quarter we have also shown a good growth in ULIPs.
Yes.
We have to look at what is the flair of the market. We have customers who have specific liking for par, and we have customers of the new generation customers who would like to go with guaranteed products. So we have to place those products to match the needs of the customers. Currently, the non-par share in APE terms has been increasing, and it has reached 30%, as I already said. We are looking at some more increase in that. But at the same time, now we'll also increase our focus on par products. For the last few years, we have been focusing on non-par because when we went public, we had less than 7%, around 7%.
And you made a promise that you will increase the non-par.
That directional change has been carrying us through till now. We have reached a stage where we can allow this to stabilize and maybe start focusing on some par products also. Going forward, we may have some more par products along with non-par products.
So is 30 the
no,
stable?
It can be still
much higher.
It can be not much. It can be still higher.
What could be that actually? Because if I look at the premium, I see a 55% coming from non-par and 45 around coming from par.
Yes, because as I told you, the big ticket sales in annuity are in non-par. So in absolute volume, non-par will be more. But in terms of APE, we would like it to grow from what we are currently now, maybe another 5-10 percentage points, and then we may like to stabilize it there.
You spoke about that you want to come back to par products. You have done a repricing when the entire thing changed in October. Are there spaces within the par products where you need to plug some of the holes?
We are examining the entire product portfolio and looking for gaps. So we would like to plug every gap in the product portfolio, not necessarily par or non-par. We would like to see how we can see. Ultimately, our aim is to grow. Ultimately, our aim is to see that we remain a market leader by a substantial margin. So that being the responsibility on us, we need to look at what are all the possible products that we can bring, which can tap the potential in the market.
Sir, when we calculate your embedded value, we look at economic assumptions as well. And in terms of economic assumptions, I think there was a fall of 2.3% or something in Q1, if I'm not wrong, largely because of the interest rate scenario which happened. Do you see this economic assumptions to remain stable in going into the full year? Do you see any challenges from
No, sir. Actually, the risk-free rates are the ones which is the major economic assumption that we do. When we are looking at RFR, it is not decided by us. It is decided by either the market or by the pronouncements of the RBI.
Yes.
So, as of now, the rates are held. There is no change in the current MPC. If it going forward, if there is further changes in the interest rate, it can have a small impact on that. But on the other side, we have been improving the
cost efficiencies
on our optimization of expenses is something. So that is one more assumption which goes into the VNB margin and EV calculation that has been compensating for it, and the product mix change. So there are multiple components which affects either the EV or the VNB. So both the economic assumptions as such is the one which brought it down, but it has been adequately compensated by the improved expenses ratio as well as the product mix.
Because your VNB went up by 150 bips quarter to quarter, and that's largely because of the cost efficiencies and and expenses coming down.
Yes.
But economic assumptions came down despite that 150 basis points you've been able to do it.
If you had seen our presentation, we had talked about how the product mix has contributed around 1.9% increase, and the expense assumptions increasing by 1.9%. Though there was a pulling down by the economic assumptions, I hope the economic assumptions may not undergo a very big change in the remaining part of the current year. It's only the market to tell.
And I'm asking this because you're one of the largest players in the market as well. How do you see the current economic scenario, especially from the capex point of view, capex cycle picking up? You have a very close view, you look very closely to that, because every company which is raising comes to you, every debt which has been raised in the country comes to you. How do you see that scenario with respect to capex cycle?
We look at the market very optimistically. Okay, we would see the entire focus of the government is towards Viksit Bharat. That cannot happen unless investments increase. So whatever steps that is being taken, be it the monetary policy that we are talking about, the focus is on growth. As India grows, there will always be a growth in opportunity for us to look at investments. So as a person, as an organization, we are quite optimistic that the capex cycle as well as the borrowings will continue to grow, though it's slightly muted as of now. There will be some growth.
What is the reason you think it is muted? Because the government has infused almost 1 lakh crores as part of tax incentives. You have the RBI which is front loading it with 50 basis points or nearly 100 basis points cut in interest, and still we are seeing little muted. What is your assessment, sir?
No, actually you are seeing so many changes happening, so many challenges, geopolitical, the whatever we are now currently looking at.
The tariff problem.
Yes, there are multiple challenges in front of the country, but we are so confident that this country is capable of surmounting every challenge and coming out very successful.
One area where there is a slight fall was a persistency. The long term is holding up, but the short term is falling. What is your view on that, and how do you plan to plug that actually?
As I told you, sir, we are not a metro player or a tier 1 city player. We are a player across pan India. We have customers from all strata of the society. What we find is the persistency of small ticket policies are always under strain because of the vagaries in the income of the population. People who are at above the certain level of income, for them it becomes easy to keep. So you look at it, if I remove all the small ticket policies from LIC's portfolio for the time being.
So when you said small ticket means less than 2 lakhs?
Less than 2 lakhs, less than 5 lakhs. The kind of population who need insurance the most, we cannot stay away from them. So we need to provide cover to them. They find it sometimes difficult to pay premium on time, but our focus is on to go contact them and make them pay the premium even if it is slightly delayed by reviving the policies and reinstating the policies. So that has been the reason why our 61st month persistency is quite high in comparison with the rest of the companies. First 13th, 24th and all, this vagaries on the income is the one which affects. The small ticket policies have a lower persistency, which we consciously try and see that it is reduced. We have to extend support to them. Our people in the field, the agents, they take a lot of efforts. Branches in the remote corners of the country, they take efforts to go and contact people who could not pay premium on time and ensure that they pay premium and keep the policies in force. This is one thing. Second, this impact of this new master circular, which increased the minimum ticket size, will have a direct impact on improvement in persistency for us. That is for something which.
Sir, one area which LIC was looking at was a health insurance. We've been hearing about that you want to actively get into health insurance. Is there a rethink in health insurance?
I don't say we have a rethink in life insurance. A step which has been started was to examine the possibility of taking a strategic stake in a standalone health insurance company so that we will have some learnings from that before the changes in the regulations and acts come into place. So we started working on it. We are expanding the options. We are looking at multiple options, but we are not now fixing a particular timeline by which this will be able to.
So when you say options, does it mean that you now want to set your own like health insurance once the composite license comes into play?
It's not the step. It's not the suggestion that I am giving. See, once the laws change and the market throws an opportunity, we can consider anything. Okay, that time it will be another option. As of now, we are a core life insurance player. We are very strong in life insurance. We will continue to be a core life insurance major player in the country. That is what our focus is. As an investor, we have a huge assets under management. We need to look at areas of investing. So we are examining the possibility of taking a strategic sale in many companies. If you say we have taken a strategic sale in IDBI Bank also, now that is one area. We have a very good bank support from them also. So similarly, a strategic sale in another health insurance company is also a very good option that we are not ruling it out. But only thing is, after the preliminary examinations we have done, we have reached a stage where we need to make some more deeper analysis of the options available with us, expand the options available, look at multiple options that are available and take a call as we find most right opportune time for that to do it. So we are now, only change we are saying is we don't fix a timeline on that, but we are still examining it.
Sir, I'm running out of time, but I have a quick question. You spoke about IDBI Bank. Do you expect the strategic sale of IDBI Bank happening this year?
It has been the focus of the government, sir. Government has been announcing.
And you're tagging along with the government in this?
Yes, that has already been publicly announced.
Yes.
The government as well
but
as...
do you expect that to be completed in this fiscal?
Sir, that I cannot say. It depends upon the steps taken by the government and the interested parties who are...
And my final question is on the dividend. You've been consistently increasing dividend. I think 12 rupees is what you had for FY25.
It is proposed.
Do you think that it will consistently go up? Because why I'm saying is that you're saying that you're comfortable with a solvency of 1.8 to 2.
Yes.
And you are currently sitting at 2.17.
Yes.
So are you looking at more dividend payouts going forward?
So for the year 2024-25, the board has already recommended 12 rupee per share. If you remember, we started at 1 rupee 50 paise per share.
That's right.
150 to 3 to 10 to 12 we have reached. As we are profitable, as we have enough profits, we can think of a right number for the dividend to be declared from year to year. That the board and the shareholders will take a call. What we are looking at is building up our profitability, staying strong in the days to come. Also, dividend declaration as a policy will depend upon the changes that the regulator is likely to bring. We may move towards a risk-based capital, we may move into IFRS. All these things are in the offing in the near future. Based on that, our need for capital, our need for retained earnings will have to be calculated, and then a call will be taken. But certainly our aim is to see that our stakeholders are happy, our share remains as one of the most preferred shares in the market.
Sir, you've been the value investor in the market.
Yes.
Do you think the market is valuing you properly?
If you ask me as a person, yes, I don't think we deserve a better number. But
I'm asking you because the government has to reduce its stake to 90% by 2027.
It is a call to be taken by the government, sir.
But do you think the current valuation is fair? Because at 0.6, 0.7 times price to EV forward earnings,
yes.
forward.
If you ask me that question, as a life insurance industry, we deserve a better multiple of the EV. That's what we look at it. But it's a perception. It is what the shareholders think that LIC is capable of. I'm sure this is going to go up.
Mr. Doraiswamy, it was a pleasure talking to you today. Thank you very much for joining us on NDTV.
It's my pleasure, and I would like to thank all the viewers on behalf of Life Insurance Corporation of India. Keep buying, keep investing. Let's grow together. Thank you.
Thank you very much.